Hey everybody, it's Stockmo here, also known as Stink Blow. Let me tell you a great stock to buy that has absolutely no competition. That's right, ladies and gentlemen, it's Neo stock. Now you better be thankful that I'm giving this information to you now, because normally I charge for my Patreon where I give out my hot stocks. And don't worry that they're down 50% each. That's just a temporary downtrend. But we're going to talk about Neo stock today because I believe it's the next Tesla.
Welcome back to Strong Man Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term bullhead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're going to look at Neo stock today because apparently this stock was super popular in the past. You know, we had Tesla in the United States. Tesla went up. That means it's a good stock because the stock went up. And basically every other electric vehicle manufacturer is going to go up like Tesla, bro. We're going to have $1,000 trillion valuation companies because it's the future. So let's go ahead and look at Neo. So here's Neo, my butt-selling Barrio stock. So Neo IPO'd, it looks like, on September 12th, 2018. And then it freaking rocketed up here, okay? Oh, right around March of 2020. Now, whenever you see a stock rocket up from $2.40 to, oh my God, $61 right during the pandemic, you know it's a clown stock, okay? Any stock that goes up this massively, this quickly, is a massive freaking bubble. No doubt. So Neo is a holding company which engages in the design, manufacture, and sale of electric vehicles. Do they say disruption anywhere? I don't see any disruption. Now, it's headquartered in Yading, Shanghai. So let's go look at some Neos, okay? Where is it at? Here. So I went on their website because I kind of wanted to see what their models looked like. So it looks like they have 5 models. They have the ET5, looks like a sedan. Then they have the ET7, looks like another sedan. I don't know if maybe it's a better model. Then they have the EC6. We have an SUV. And the ES8. Looks like another SUV. Do they have a truck? No, they don't. So basically, they have 2 sedans and 3 SUVs. Now, I wonder if they have pricing for these. How much do these cost? Well, they don't really freaking say. Let's see if we can find the prices of these things. Neo car prices. Because a big problem I have with EVs, and this is a natural part of, freaking, new technology, is that stuff's very expensive and it's hard for people to afford. So for people to put these massive valuations on these stocks so early in the game, it's freaking madness. Oh God, what is this? Here we go. So we go look. Let's see if they have prices. So it looks like here they say they raise the prices. It's the freaking price of the cars. Topspeed.com. Let's see if they have it here. They don't even freaking say what the prices are. I imagine they're more expensive than the average car in China. But, obviously we all know China is one of the leaders in electrification of vehicles. So I have no doubt that they're freaking expensive. Ooh, look at this sexy beast. Ooh. Now, like I said, the EV industry is highly competitive. Now, this article here is all the electric car companies in China. It was written April 20th, 2021. So there's probably more freaking car manufacturers. But this is a highly competitive market. The auto industry in general is a highly competitive market. So we go down and we look, and you can just see a list of EVs that are selling in China. Tesla, BYD, SAIC Motor, Volkswagen, NIO, Xpeng, blah, 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 blah. There's so much freaking competition, okay? Number one, if you want to buy a stock that outperforms, you're going to have a hard time in an industry like this because there's just so much competition and you just never know if you're picking the correct company. If you want to bet on EVs, you might want to stick to like an ETF or something like that and just letting the market sort itself out because Tesla is the number one. It probably still is. I guarantee you it's going to drop down massively and some other car is going to take its place, some other car company, and then yada, yada, yada. Very hard to predict. Now, let's go look at the financials. So we concluded the year 2021 on a strong note with an annual delivery of 91,000 vehicles, representing an increase of 109%. So they're massively expanding their deliveries, which is good because they're a new freaking car company. And of course they are. But at the end of the day, that doesn't mean anything to me. Now, let's go look at the actual financials. So we can see right here, they had zero sales in 2017. So in 2018, they generated, and this is in Chinese currency, by the way. So I guess 4.9, hold on, what is that? Yeah, $4.9 billion of Chinese currency units. And they've grown their revenue massively because now they've generated $36 billion of Chinese currency units. Yuan or renminbi or whatever it's called. Pretty impressive growth. Okay, you can't fault that. Let's go look at the gross profit. Is it improving? So gross margin, negative, negative, positive, positive. So their most recent annual report, they had an automotive gross margin of 18%. Now we know Tesla has an automotive gross margin of 31%. However, as more cars enter this industry and as these cars change from luxury autos, because a lot of these companies are just making basically luxury autos, as the industry transitions to normal freaking cars that everybody can afford, you're going to see gross margins shrink. Let's go look at Ford's gross margins, see what those are. Ford, Dodge, Ford, Ram. Oh, yeah. Look at Ford's gross margins 12, 4, 5, 9. Let's go look at GM. Not very impressive. So when you get sucked into these gross margins, just be aware that at some point in the future, when these car manufacturers have to make cheaper cars so they can actually be affordable to the masses, these gross margins are going to shrink. So you got 14%, 11%, 10%. Jesus. Let's go look at Toyota's gross margins. Now, there may be some inherently, maybe battery technology will increase gross margins in the auto industry as a whole. I don't know enough about that, but I know for a fact, 100% certainty, that gross margins will shrink in the EV industry. So Toyota actually has much better gross margins. So, best case, maybe NIO maintains 20% gross margins in the long run. I don't know. We'll see. Let's go look at some other numbers. So NIO, my PO, has generated losses every single freaking year. So it's still massively unprofitable. So my question is, out of all these freaking companies, what's so special about NIO? They have two sedans and 3 SUVs. Okay, and they're losing money. Why are you buying this stock? Buy a freaking index. Doesn't make sense to me how people like that. They're so fanatical about these companies. Look at the growth. Think about the industry. Think about how the industry is going to change over time as they have to make cheaper cars to be affordable to the masses. Doesn't make sense to me. So let's see. Let's go look at some more margins. So gross margin is improving. That's good. At least it's not freaking negative. Operating margin, negative, 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 but getting better. Profit margin, negative, 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 but getting better. And they even had some free cash flow in 2020. So I believe at some point this company is going to be profitable. There's no doubt in my mind. But that doesn't mean you buy the stock, because you have to consider the whole market, not just, what's going on with this particular company's growth. It's down. Yeah, it was a high of freaking, God, I can't believe how much this stock ran up. $61, and now it's trading at $18. If you want to buy this stock, you need to be patient. You need to be extremely patient and really watch the growth of the EV market in China and see which companies really are most likely to dominate. I don't see what's so special about NIO. I wonder if BYD is on here. I wonder if we could see their gross margins. Oh, wrong one. Boyd Gaming. What is that? BYD. BYD. Did Warren Buffett buy this? Okay, so their gross margin is a little bit less than NIO's. But NIO just had one good quarter or one good year, and you could see that BYD got up to 20%. But this looks like it's maybe a little bit more mature. Yeah, they're profitable. Okay. You would maybe consider buying this stock because at least it's freaking profitable. So let's go back to NIO. All right, let's go look at their balance sheet. Balance sheet. So we can see they have cash equivalents, and short-term investments of 55, billion Chinese currency units. And they have current liabilities of 29 billion. So they're not going to have a problem paying off their debts. Long-term liabilities, have they been growing their debt? They took on a lot of freaking debt. Look at this. They went from 6.9 billion to 12 billion. I wonder what they did with that. I wonder if their assets increased proportionally. Property, plant, and equipment. Okay, they bought PP&E, long-term investments, whatever this is, could be like bonds or stocks. So their debt has increased pretty massively, but it all depends on what they use it for. Let's see. Common stock. Look at how much those shares of the common stock are increasing. Whenever you see something like that, that's massive share dilution. I mean, they're going to dilute the crap out of you. Let's go look at the statement of cash flows. Okay, so they have positive operating cash flow, and the biggest add back is depreciation and amortization and other operating activities. That could be changes in working capital. So at least they're cash flow positive, and they've been cash flow positive for a long time. So that's actually a good sign. Capital expenditures, change in investments. Okay, that really doesn't mean anything because sometimes you have to freaking, like, what happens is companies have a bunch of cash and they're like, okay, what do I do with this cash? So they just plop it into freaking, treasuries or whatever to kind of, get some kind of yield. So when you see change of investments, all that means here they bought 35 billion Chinese currency units of investments. They're just parking the cash somewhere. But if they're liquid, they could sell that, use that to pay bills or finance stuff in the future. They just don't have anything identified for that cash right now. All right, share issuance. So I see positive numbers here. So what does that tell me? They're freaking issuing shares. Debt issued. I see positive numbers. That means they're issuing debt. They're borrowing and they're issuing lots of debt. Free cash flow, negative, 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 1 year of positive and negative. Let's go look at some ratios. Market capitalization, whatever. Price to earnings ratio, they don't have one because they're unprofitable. Price to sales. For a freaking car company, I mean, I get it. They're a growing company. Go look at price to sales ratio of like a fully mature company, Ford, Toyota. I wonder what Tesla's price to sales is. So NIO's is 5.58. Let's see what Tesla's is. Whoa, 13. Jesus freaking Christ. All right. But if you look at a more mature auto manufacturer, when you think about where these companies are going to be in the future, you can kind of get a good idea of how they'll be valued by the market by looking at similar companies. I mean, look at Ford's price to sales, 0.28, 0.61, 0.41. NIO's pretty richly valued. I wonder what BYD's price to sales is. Keep looking on Boyd Gaming. What is this stupid crap? Watch it be a great company. Price to sales. Okay. BYD's is a lot more reasonable. I wonder if they're growing as fast. I mean, they're still growing at a healthy clip. I mean, not as fast as NIO, obviously, because NIO's new. So they don't have a PE ratio. Price to sales, pretty rich. Price to books, pretty freaking high. Price to operating cash flow. To get $1 of operating cash flow, which that doesn't even account for capital expenditures, maintaining your capital assets. You got to pay $102. $102 for $1 of operating cash flow, a portion of which you're not going to get. Okay, debt to free cash flow. Well, they have negative free cash flow. So looking at this, I mean, I don't know. I don't get it. Like, look at the massive dilution. Look at the rich valuation. Look at the competitive landscape. What's so special about NIO? I don't get it. I mean, I go back to the website. Where's their freaking website? There's so many tabs open. Did I close it? Crap, I think I closed it. Let's go to NIO.com. So let's see what else NIO's doing that's special. Okay, they have their cars. They have the NIO house. I was looking at this earlier. I was like, what is this? So it's an open, welcoming space for our users and community to express, share, and experience memorable moments together. So I guess they build some homes for specifically NIO drivers. Envision with you in mind. So I guess, you go hang out with other NIO snobs and talk about how rich you are. 47 NIO houses across the globe. That's so beautiful. Maybe I'll go visit one. Yeah, they got one in Shanghai, Beijing, Hangzhou. I'll show you something hung. And in Oslo. Oh, yeah. And they have NIO Power. This is all their charging equipment crap. Okay, what's so special about this? They have houses. They have service. Okay, an auto manufacturer providing services. Wow. Freaking amazing. Okay, they'll come fix your car. Lifetime free warranty. That's a little sketchy right there. Warranties, you have to, with a warranty, it's risky on a financial statement because what you have to do is you have to accrue a warranty liability based on an estimate. So if they massively underestimate what their warranties are, they've massively overstated their profits, for example. So we don't know if these cars are going to be breaking down, having issues. A lifetime free warranty. I'd be curious to see what their warranty reserves are, to be honest. Regular maintenance, lifetime free road rescue. That's a lot of promises, man, especially for a competitive industry like this. Neo Life. Okay, this is just getting, what is this? Is stupid. Okay, we got some, I guess, famous people. They should put me on here with my big hat. Oh, they have bottles, guys. Look, they have jackets. They have more jackets. Wow, what a disruptor. Wallpaper. Okay, so okay, I don't know, guys. What am I going to say about this? I am not touching Neo with a 10-foot pole. The amount of competition in the EV market and how hot the EV market is right now, I think it's still in a massive freaking bubble. Until you see Tesla get wrecked, I would not touch stocks like this. Neo 2100 Stockmo. Yeah, Stockmo's a freaking idiot. Neo is nicer than La Tesla. Is that true? Is that true? Nothing is passing. Oh, here comes Tesla fanboy. Nothing is passing Tesla. Everyone else is just trying to figure out how to scale production for their EVs. You're right. 10 years from now, every car is going to be a Tesla. There's no competition. Everybody's going to want to buy a Tesla. It's just how it is, man. Neo will catch up to Tesla easy. So another risk is that, especially for Tesla investors, I mean, Neo is a Chinese company. The Chinese authorities are going to want to incentivize and, promote their own businesses. They want their businesses to dominate. They don't want Tesla taking over their entire country because it's a U.S. company. So in the long run, I'm curious to see what happens to Tesla in China. I mean, I'm not positive. Tesla has a lot of China risk. A lot of China risk. People talk about Baba. Oh, Baba. But you look at all these other stocks these clowns are buying. They're either Chinese ADRs or they're freaking, they have a lot of exposure to China. Gross margins will not shrink until the production of EVs surpasses the demand. So far, global production didn't seem, it will shrink. Give it a couple of years. Trust me. Number one, I've said this 1,000 times. Number one, right now, these are new, exciting luxury cars. So, of course, they have high gross margins. Everybody wants a Tesla. Everybody wants an EV. It's the future, bro. So, of course, freaking gross margins are going to be high. But over time, if EVs really take over the world, they're going to have to produce lower models. And on top of that, or lower quality or cheaper models. And that's going to drive down margins. That's why the other auto manufacturers have low margins, because they make high-end vehicles. Think about Ford with the F-150. They make high gross margins on that. I couldn't find what they were, but I bet you they're freaking high. And then they make Ford Fiestas, or I think they discontinued those, but I have a Ford Fiesta. So when they average out, the gross margin's lower. But if EVs take over the world, of course, gross margins are going to shrink, especially with all this competition. I mean, just look at that freaking list I pulled up. There's 40 car manufacturers on there. It's crazy. Helps to me, Kevin has this Neo example in his course. Like it strong, man. Oh, I've been looking at Meet Kevin's course, but it's a lot of crap. So, all right. Well, I think that's about it for now. We'll see if I have time to make more videos. I don't know. And I'll talk to y'all later. Cheers.